Prior to this, she was the Managing Director and CEO of ICICI Ventures. Ma'am, thank you very much for your time. Great to have you here. Appreciate you joining in on this special day. First up, from all of us here, wishing you, your team, a very happy Women's Day. Ma'am, you're actually, the torchbearer as far as women in finance go, from leaving ICICI at a high point in your career, setting up multiples, which now is one of the largest funds, to having many successful exits, which I think is how the real metal is tested in this business, in your business. What is your message? I mean, if I can begin this conversation by asking you to women who aspire for a career in finance, and I mean, just our viewers, what would your message be?
Well, I would say that women should feel at least as endowed, as capable as men. And when it comes to the investing business, especially the private equity business, which is a lot of nurturing and a lot of intuition, both put in play along with the analytical skills, I think that women have probably these qualities in great measure, which makes them uniquely advantaged to be successful in this business.
Okay. Ma'am, two of your biggest spoken about and recent investments is in Arvind as well as in PVR, and both of them talk about maybe the urban consumption pattern of India. Your sense in terms of the growth trajectory that we can see from the likes of Arvind as well as PVR, and your thoughts in terms of whether you would be investing into this kind of pattern or to capitalize on the urban consumption pattern a little more.
Most certainly. I think that consumption is the biggest investment thesis for India. Whether it is consumption of apparels, as is the case in Arvind, or entertainment, as is the case in PVR, or even consumption of financial products, whether it is arising out of financial inclusion, financial penetration, like in the insurance products. These are going to be very big investment opportunities for any investor in India for as long as I can see. I mean, I see this trend for the next 25 years. I would only say that, I am betting not just on urban consumption, but I'm also betting on rural consumption. I think that's going to be a very, very big thesis for the India consumption story. These companies expect a growth trajectory of over 30% year on year, arising out of growth in the markets where they are present today, and also organic growth arising from entering markets or geographies within India that they are not present today. So from a growth perspective, it will be the good companies in these sectors can show anywhere between 30 to 50% growth.
Ma'am, could you run us through the status of your funds? I mean, I think you're 50% deployed as far as the second fund goes. Have you completely exited the investments you made in the first fund? And just some color on what the current status is. And we're already hearing talk about the third fund, of course, in the future.
That's true. Yes. So I have not completely exited from Fund 1. As you know, in the private equity business, we put the pool together at one point of time, but we invest over a 3 to 4 year period. So our divestments are also over a 3 to 4 year period. But my mantra in managing my funds always has been to return the principal on a weighted average life of anywhere between 2.5 to 3 years. So we are well on track to return our first fund this year. And while we continue to look for exit options of the balance portfolio in the next 2 years, you are absolutely right that our second fund is 50% invested. We have had a very healthy clip arising out of the franchise that we have built in the market over several decades, actually, in the private equity business. As far as Fund 3 is concerned, that is something that I am targeting for sometime in 2018.
Ma'am, could you refresh our memory in terms of your holding in PVR? How much do you currently hold? How much have you possibly exited? And what is your plan in terms of further returns? Are we going to see a further exit?
We currently hold 14% in PVR. I am not looking to exit this in any hurry. In the investing business, it is important to be systematic, especially the kind of funds that we manage. Our investors would expect that we return the funds, in a weighted average life of about 5 years. As probably you're aware, I had made 2 investments in PVR in the multiples avatar. The first investment was for the acquisition of Cinemax. That was from our Fund 1. And the second investment was for the acquisition of DT Cinemas. That was from Fund 2. So we felt that it was in good order to exit partly from our holding in PVR and return capital to our investors. Particularly, this became very attractive for us because the returns have been very attractive from our acquisition cost. And we currently hold 14% in the company, which I think is a significant stake. It's the same stake as the incoming investor, which is Warburg Pincus. And together we can provide a lot of stability to this company and to the management.
Ma'am, you said consumption is the big play. Could you be a little more, without naming names, where exactly, what should one look at? Should one look at big segments which will go from being unbranded to branded, like foods, for example? Companies like Patanjali are going into that in a big way. Should one look at personal care, which is more organized and has got many players? Which segment? I mean, if that'll be helpful.
Sure. See, as far as the country is concerned, we are going to see a big rise in consumption across the spectrum, whether you call it food, organized to unorganized, unbranded to branded. I also think that GST is going to bring about change that we are probably not able to fully comprehend at this point of time in terms of the shift from the unorganized to organized. But when it comes to investment by a private equity firm like us, we have to look at where are the management teams and the depth of experience which can predictably create value in this shift that is happening in the country. So the reason why we betted with Arvind Brands is that they have more than 15 years of experience in trying to build branded apparels business in this country. The portfolio is a very wide and diversified one, which addresses the opportunity that is arising from a slightly lower end of the middle class all the way up to the uppermost end of the middle class. So if we look at the range of brands that we have in that company and also overlay on top of it specialty retailing like Unlimited, which is clearly addressing value retailing, you are addressing the opportunity in a very broad spectrum of India and not only at the top end. And then you combine it with the depth and the experience of the management team and the clarity of the vision that is provided to them by the family and by the board. It makes it an extraordinary case for private investing, in this country. But to address more generally your question of consumption, I think financial services and financial products are going to be a very, very big area of consumption in this country. Moving from unorganized to organized, whether it is in apparels, whether it is in food, it is going to be a big area of consumption. All your two-wheelers, cars, those are going to be big opportunities. But the trick really in making money is finding that right opportunity at the right time on the right terms. The big thesis everybody knows. But how do you pick those micro winners? How do you nurture them?
Right.
How do you get your entry timing right? How do you then focus on creating value in the company
Got it.
and exit at the right time to the right partner is what makes money.
Ma'am, it's a pleasure. Thank you very much for that perspective. Great having you with us here and look forward to more chats. Thanks indeed for being here today, ma'am. Thank you.